Hi, everybody. This is Freedom FFS's or Freedom Financial Solution FFS's monthly free group Q&A. It is February the 19th, Wednesday, 2025, for anyone who's watching this later. We've got our founder, Cass Smith, here with us to answer most questions. And I am Mary Jane. I am the leader of the setup division in the self-managed super fund setup division at Freedom FFS. We've had quite a few people book in, and we've got some people online here already. Just to let you know, it is being recorded, and we will upload it to our YouTube channel for people who missed the session and want to hear it. So by all means, keep your cameras off if you prefer. And we normally take questions. Anyone who wants to put their hand up online, or if you're having trouble with your microphone, as sometimes happens, put the question in the chat. Cass, this is just a free and open question and answer session on any topic. What topics do you cover?
Pretty much anything that anybody wants me to that is within my scope, which is quite broad, from anything to do with self-managed super funds to gold and silver to property to mortgages to tax to trust to business to the state of the world to anything you'd like to talk about. So as Mary Jane said, it is just an open question and answer. I don't give any particular presentation of any sort. And normally we end up going for half an hour, 45 minutes, even the full hour if a lot of people have got questions. If nobody's got any questions, then it's nice and quick. So it's all up to you guys. So if someone wants to raise their hand or type a question in the chat, then we can get started.
And we do just need to put in the disclaimer that this is not financial or legal advice. It's just Cass's opinion and my explanation in terms of SMSF process and other matters. So if you do hear something tonight and you want to get financial or legal advice, by all means, go ahead and do that. Anybody got a question? Put your hand up or just start speaking. We do know that sometimes people jump on these to hear what other people are asking because, you know, that's a way of learning, and we're all about helping men and women learn more. So if you don't have a question, that's fine. If you've got any topic you'd like Cass to just sort of chatter on about, you can ask that as well. She's always got interesting points of view.
Sometime.
Cass, what's at the top of your mind today, this week, in terms of what's happening in the finance world? Anything?
Well, for people that have been watching us for the last year or two, you know I have been saying that there's going to be a major economic crash, and the best thing to do with everything is get all your spare money or anything that you don't want to lose into gold and silver. That's been my consistent message for 3 years now. And I started to feel like a bit like of a how many more years can I say the same thing, because this economic crash I keep predicting just doesn't seem to come. But the updated news for anyone who does follow Jim Rickards and Robert Kiyosaki, which is where I get a lot of my information, is that they have gone as far. Well, Robert Kiyosaki has gone, no, sorry, it was Jim Rickards has gone as far to say not only the day, but the time of the coming economic crash. And this is the first time I've heard Jim give such a specific prediction. He's often done, you know, years or maybe towards the end of late next year and things like that. But this is a specific day and a specific time, and it is 8:30 on the 11th of April, 2025. He predicts there will be an immediate 20% drop on the market, then a little bit of a rally, and then another 20% drop. So 40% drop on the 11th of April. So we can only wait and see.
Does he say what he based that on?
No, I've ordered his book and it hasn't arrived yet. He did have a spiel, and if you Google him, I'm sure you'll find it. He's all over YouTube, and he had a spiel about it. And then you could either pay to listen to the rest of the spiel or order the book, and I like reading, so I ordered the book. Yes, so that's going to be very, very interesting. But what it does bring into point of view, if we're looking now the 19th of February, and if he is predicting the 11th of April, that only gives us end of February, March, and a few weeks into 1 week into April. So for anyone here that's set up an SMSF, you'll probably know that it took you about 6 to 8 weeks. You know, if we're really pushed, and Mary Jane always does a fantastic, very prompt job at getting everything out. And if you do a very, very, very prompt job at getting everything back, and if your super fund plays nice and the ATO plays nice, I think what's been our record, Mary Jane, was it 3 weeks?
Yeah, 21 days. Yeah, 3 weeks.
Been the record, but on average, it's a 6 to 8 week process, which basically puts you right at now. If you haven't got an SMSF yet and you've been thinking of it, and if you believe that there are experts out there like Jim Rickards, who used to be an advisor to the Pentagon and the US government, yeah, I think now would be the time to get it done. Because why does it affect super? It affects super because a lot of people don't realise that your superannuation, if it is not in SMSF, if it's in conventional super funds like Rest and Host, Australian Super, CBUS, to name a few, they have invested it pretty much all in the share market unless you've instructed them otherwise. So if the share market does a 40% crash, then your super does a 40% crash. And that's exactly what happened in the GFC. People just woke up and realised, oh my God, it took about 2 or 3 weeks and the share market halved. So people that were in their late 60s thinking they had enough to retire, all of a sudden now only had half the amount of super. And I was an advisor way back then, and I got to see people struggling, and 65-year-olds who were just about to retire now have to go and work another 10 years until they were 75. And it took about 15 years for the share market to recover fully. So these share market crashes happen, and I have been predicting one for a few years, and now there is a specific date and time for it. So
and those who rushed in September 20, well, it was middle of 2022 towards the end, and it was all the sky was going to fall then. There were 600 of them came through our doors then. They're all very happy because gold and silver, well, gold in particular has gone up, what, 50%? And silver certainly had a good rally as well. So they're not complaining that there wasn't a crash because gold and silver has done a good deal anyway. And have you been following? So Tim is typing, and just for those who came in late, if you do have a question, put your hand up or just start asking. We're just chatting until someone's got a question, and sometimes no one has a question. Have you got any? Are you watching what's happening with the audit at Fort Knox, where they supposedly is gold, isn't gold, is gold, isn't gold?
no, I haven't seen that. If you want to elaborate on that one.
Oh, well, I don't follow it in great detail, but there's been a lot of stuff on the socials, especially Twitter, that Elon Musk and others have been putting, we're going to do an audit on Fort Knox. And they're saying, oh, well, the last audit was in 1957 and only 3 of them were allowed in. And was there actually any, and is it there? And then some people have been saying, well, maybe there's more there than there should be because they've been confiscating it or taking it from somewhere. So it's a whole thing about gold at Fort Knox. And the other side of that is, if the gold isn't there and it's been lent out or given out somewhere, is the US government now, or the president now, recalling it all and bringing it all back in? And what impact is that having on the London the London stocks, for example? Apparently some of the gold companies or the bullion companies in the UK literally have no reserves. So that what they've started to do is selling a gold bar, but then they don't have any left. So they're saying to people who've got bullion in their stores, oh, well, we'll pay 16% interest on borrowing this for a month, and they're selling it to someone else. So, I mean, that in itself is unsustainable. But bottom line is that says they don't have the stuff in their stores. Tim has asked a question. Thank you, Tim. Apart from silver and gold accumulation, what is your opinion on investment in crypto utilizing 10% of your total portfolio?
Yeah, so that's definitely a fair enough question. And we say up front, we aren't financial advisors. This is just our opinions. And I'm not an expert on crypto, and I don't even want to start to be. Every single time people start talking about it, particularly how they can mine it and spend all day on the computer in the background mining something and then make money out of it. My mind just swims. I think I've been in this industry for 35 years and I've learned everything I've learned. No, I don't want to learn anything more. I'm done. So crypto's beyond me. But we do have our partners, Ainsley Bullion, who are very good on crypto, and they have their own experts that you can talk to. What I have always said on crypto is put what you can't afford to lose into gold and silver and what you can afford to lose into crypto. So, Tim, a 10% allocation of your portfolio, if that's what you're comfortable with losing, then by all means, or 5% or 2% or whatever you're comfortable losing. What I have seen from crypto, and I have invested myself in it now recently, but I simply have gotten Ainsley Bullion to do that for me, and it has done very well along with gold and silver. And both of the asset classes, crypto and gold and silver, are the ones that stand to do very, very, very well in the event of an economic crash. So, yeah.
And when people say crypto, there are hundreds and potentially thousands plus crypto products out there. When I attend the seminars with Ainsley Bullion, essentially they are the ones that they talk about as being valuable to invest in is gold 2.0, which is Bitcoin. Because there's only ever going to be 21 million Bitcoin ever mined, and they're up to about 19 million now. Some of those ones have been lost and nobody knows where they are, but you're not buying a whole Bitcoin if you can if you can afford it, but most people buy slithers of them. What are they called? Satoshis, I think. But there's going to hit a ceiling where there is absolutely no way that the blockchain will allow any more than 21 million crypto mined. Which means that then demand for it, if demand goes up, the price will go up. So Ainsley basically, when they talk about crypto, it's Bitcoin is gold 2.0. Ethereum is the only other one that they talk about as having a tradable aspect to it, much like silver has an industrial value. So, for example, some of their products use the Ethereum technology. I don't know what that is. Please attend the next Ainsley crypto and banter session, and they'll tell you all about that. So when we talk about crypto, essentially, there's millions of products or thousands of products out there. We have seen clients who said, I've got $500,000 in this particular product. And we say, well, yep, that's the value you say you've got. It's not actually the value until you can cash it out. Some of them have found that they have not been able to sell them. So the whole spiel is, yes, we've developed this product with a view to the future, something, and they cannot actually realize the value of it in cash if they need to use it for whatever reason now. So some of them have been stuck. So when you're looking at crypto, do pay attention to what crypto you're looking at. Gomati is asking, Cash, did you say that John Rickard, predicted a 40% crash?
Yes, he said something along the lines of 20% when the market first opens. At 8:30. 8:30 will be a 20% crash. And then, as often happens when a market crashes, is that people start buying in because they think, well, the market's low, I'm going to jump in. That can cause the market to come back up a little bit. Then he believes it will crash another 20% after that. So 40%, which is in line with what I have been predicting for years, and it is in line with the GFC.
So 8:30 a.m. Is that US which time?
Yeah, that would have to be US time because that's where he's talking from.
So now Donna's asked, how much do you need in your super fund to start up an SMSF, and what are the costs associated? Do you want me to take that, or you want to take it?
Yep, you can take that. No, you can take that.
So look, there's no legal limit above which you need in your super to set up a self-managed super fund. We have done it for people with very low balances. When I say low, probably 30,000 was the lowest. We didn't know that the balance was that low. And what we would have said, and what we do now say to our clients when they come to us, we, number one, ask how much have you got? And number two, our sort of general rule of thumb is once you've got 200,000 and above, it becomes cost effective. So it's not that you can't do it below that. It's just that it may not be as cost effective as your current super fund. And what that means is typically your industry or retail fund will charge you 1 to 1.5% in fees. on the value of your fund. So let's say you've got 200,000, your fees may be around the $2,000 mark. With an SMSF, you've got annual tax lodgement accounting fees or administration fees. And then there's the audit, and the ATO charges a small fee, and then there's a $65 ASIC renewal fee. So all over, we say the transfer of fees from what you're paying now to what you would be paying to administer an SMSF kind of is cost effective from the 200,000 and above. It's not that you can't do it. And what we do suggest with people in that situation is have a think about who in your friends or family in particular who is like-minded, which means they want to invest in the same assets that you do, that who is there that may want to join, that then the total combined balance, if you've got 200 and they've got 200, you've got 400, bang, it's going to be less than 1% of the value of the fund in administration costs. So if you want to know more about that, and I won't go into all the costs associated. There's the setup fee, which is $2,500 plus GST. We do a whole lot for that, from order form to money in the bank. There's a lot that we do for that. And then there's the annual administration fees. So if you want to know more about that, please email me and I'll send you more details. And Donna's next question is gold and silver purchased on paper, or do you buy it to store at home in your purchasing from your SMSF? Cass, I'll let you answer that while I put my email in the chat.
Sure. Yes, we always recommend that you actually do buy it. It's not a paper transaction. It's buy and store at home, if you are okay with doing that. Some people feel that's risky. They might get robbed or something like that. So if you're at all worried about it, then we still suggest you buy the physical. You don't buy shares in a gold company. That's if the share market crashes, the shares in the gold companies will crash. The other way of doing it, if you don't want to store it at home, you can store it in a private vault. So Ainsley Bullion in Brisbane and in Melbourne have a vault that isn't very far from their office, and you can store it privately there. Nobody knows what you've got in the vault. You have the sole key to the vault. You can go and put your gold and silver in there, and it's in a very, very high-class, secure environment. Then there is another option that Ainsley Bullion offer, and I personally have used this option as well, and that is called their unallocated and allocated pools. So instead of going and picking up the physical bullion and taking it to a vault or taking it home, you can have it, if you have it in their allocated pool, you still have the physical gold and silver in your name. They have just gone and put it in their big storage vault with your name on it. So there's lots of different ways of doing it, but we do recommend the physical hard gold, not just shares.
And even Ainsley, and we say Ainsley a lot because they're the ones we have most contact with. There are lots of bullion dealers around, but I don't believe there's any quite as innovative as Ainsley. They've created a lot of new products based on physical gold and silver, and one of them is a tokenized version. So it's still backed fully by tangible gold and silver, but it uses the crypto technology, Ethereum blockchain, to tokenize it. So instead of buying, a 10-ounce gold bar, you can buy a slither of it, and it's tokenized. And the beauty of this particular product, sounds like I'm a salesman. We don't get any money from them, by the way, but I'm just really impressed with their product. It's tokenized. So if you've got the gold or the silver version and you saw it went up and you go, I'm okay, and Bitcoin's down, I'm going to sell that and buy some Bitcoin. You can do that within their ecosystem, within their environment, without having to put the money in the bank and then buying it from the bank. So you don't have to sell the gold, real gold, but it's tokenized. You don't have to sell it, put that money in the bank and then buy the crypto, or sell that gold, put the money in the bank and buy the silver. You can do that exchange within their Ainsley ecosystem. And they say it's the most cost-effective way of buying gold and silver. So they've got like 5 or 6 different products, and including the Ainsley Saver, which is a new product. So they're really innovating to help men and women engage with what they consider to be money, like not just, stuff on digits on a screen. They consider gold and silver to be have real value. Cass has written Ainsley Bullion, Brisbane and Melbourne, and they have a great website which has got a lot of interesting articles. Some are a little bit too complex for the average punter, including myself. We extract what we think will be of interest to our networks and pick the eyes out of it and put it on our news and events on our website and in our newsletter. So if you want to have a look on our website at that, feel free. Gamati is typing.
And I think that's a really important point to note when we're talking about Ainsley Bullion, that we don't receive any commission. I was offered commission way back in the early days, and I refused to take it because I've always just been of the mindset that if I'm taking a commission, then I'm not independent, I'm not unbiased. And people would have right to question, well, she's only saying that because she's getting money out of it. So we don't take any commission whatsoever. And there are other dealers out there, and some of them are reputable as well. So if you don't want to use Ainsley, there's a few others that we can mention. But Ainsley are also like-minded. They are 100% like-minded. So when you are contacting them to buy gold and silver, they know why, and they will assist you. And some people have had problems in the accounting world with their SMSF, with other accountants and particularly financial planners saying, oh, you can't have all your money invested in gold and silver, you have to diversify, et cetera, et cetera. Well, that's not true. You can invest in whatever you want in your SMSF. You can have 100% of your money in gold and silver if you so choose. And Ainsley Bullion are aware of that and know that and don't question you. They just help you get what you want to buy.
Gumati's saying, I've found Ainsley to be great to deal with. Yeah, that's a great testimonial. Thanks for that. And Donna's got another question, but I'm just going to quickly cover this one from Gumati. Are super funds still releasing rollovers for SMSFs in good time, or have they slowed down? I have a friend with only savings fund standard super. Actually, they're fine. It takes maybe 2 to 3 weeks to get the money across. I think one of the reasons they slowed down in late 2020 and up till, say, mid or late 2023 was there was this massive influx of people requesting rollovers. We alone had 600 plus, 700 requests. So we were smashed and we sort of slowed down. And that had a knock-on effect. And it wasn't obviously not just us, but the ATO has reported that SMSF setups are at all-time highs and they're continuing to be all-time highs. But like us, I think the super funds now have improved their systems, but also it's more it's not just a peak, it's not a spike, it's a steady trickle. So they're not too bad at the moment, actually. And we know a lot of, oh, sorry, it's Jim Rickards. Yeah, we know a lot of their tricks and so on. Yeah, that was my mistake. So we know a lot of the things that the tricks they use to play on to delay the process, and we don't let them get away with that anymore. So it took us a good year to figure all that out, but we're there now. So Donna's up, what other investments do you suggest to add to your SMSF other than gold and silver?
Yeah, I was about to come to that one. So, other than gold and silver, it's very difficult because I do not recommend, and once again, it's not financial planning advice. I was a financial planner for about 20 years. And as a financial planner, I would always be recommending a diversified portfolio. What happened in 2020 and 2021, I guess I woke up to the state of the financial system and resigned as a financial planner because I no longer wanted to ever put anyone into the share market. It's just been gold and silver since. The only other things that people have been putting in their SMSF, and I fully acknowledge that it could be a good investment to look at property still. I used to do a lot of property investment advice in self-managed super funds. I also perceive there could be some upcoming problems with the property market. I've gone back into property a little bit myself, but I feel it could be an unsafe investment. I'm sure you're all aware of the things like the lack of title deeds and the fact that they can raise our rates and taxes to astronomical levels and our insurances and just make property ownership basically unaffordable. But one type of property that I would not have recommended in the past, but I do now, is that of rural property. So farmland. And the reason for that is so that you can have your own animals and crops and self-sufficiency for whatever's coming in the future. And an SMSF can invest in rural property as well.
Yeah, and I don't know if you've been watching the, councils change things all the time. The Gold Coast Council's just announced, oh yeah, depending on what floor you're on, we're going to double, triple, quadruple, your rates, depending on your view. And in Canberra here, they say, oh, well, you need such and such if you're on this floor or that floor, and we're going to charge you more. In Melbourne, in Victoria, has anyone seen that in Victoria, I don't know if it's Melbourne, where you need a license, a paid for red license, if you want to work on a car on your own private property. So if you want to actually do any mechanical tinkering, they will fine you if you haven't bought the license for it. So more of this coming your way, brought to you courtesy of mad public servants, unless we, say no, which I think people are beginning. One way that people do look at this is that they're just pushing everybody to the edge until more people wake up and say no, or they're pushing everyone to the edge until everyone capitulates and just says, you just take my soul. I don't know. But yeah,
I won't be doing that.
No, neither will I. So feel free to verbally ask a question if you want, if anything at all. Oh, I will just do a little pitch for another Q&A that we are running, and I'm going to just share my screen so you can see it. So it's on our website. On our website here. So these free Q&As are fantastic to learn things about. I go to a lot of the Ainsley seminars to learn about their gold, bullion, crypto, and so on. We typically focus on SMSFs, tax, and so on. One thing we're focused on from this year more is estate planning and wills under the title of Protect Your Legacy. And we have a fantastic legal partner, or he's our legal consultant, Grant Abbott. And this book is quite unique in Australia. It's Family Wealth Protection. It was just published at the end of last year. And it goes through a whole bunch of strategies to ensure that your estate, which means when you die, you've left your house, your money, your SMSF, your super, all that, to ensure that your legacy, your family, is actually protected and not eaten away by the litigious vultures. And what that means is that the litigation in Australia is entirely out of control. And there is a month period where after you die, your estate goes onto a website, essentially to invite anyone who has a claim on the estate to put their hand up to make a claim. And that's where the litigators go, and they look at the juice. They have a lot of information in the background. They look at the juicy estate. Oh, how much money's in that? Oh, that's like $500,000. That's $1 million. And then they go hunting. And social media these days, as you would know, you can find anyone. And they go and they find, let's say you've got a son or a daughter that had a boyfriend or a girlfriend that lived with them for 2 years, 5 years ago. 2 years is the cutoff point. They are now considered a spouse, an ex-spouse that was dependent on someone who is now going to receive your estate. And they will say, no fee, no win, no fee. We'll represent you in court and we'll get some of that cash for you. Who's going to say no? There's lots of examples in this book. I don't think it is available in ebook format yet. I'm just looking at it doesn't seem so here. There is a discount when you click this here. It is something that's handy to have on your coffee table where everyone can read, especially your kids. So it's not about investment if you think about it as insurance for your kids. But the one example, I mean, there's many examples in the book. Young woman in her 20s received an inheritance of a townhouse in Melbourne from her grandmother. The litigators found an old boyfriend that they'd lived together for 2 years, 25-year-old fella. They went to court. He got awarded $900,000. So she had to sell the townhouse. Obviously, she had to give him $900,000, and maybe she only had $900,000 left. I don't know. But you know who did get a big chunk of that? The litigators. So if you've got any sort of complicated, exes, your kids have got exes, any kind of blended family arrangement, do join this free group Q&A. The next one's coming up on the 5th of March. I've been trying to get the event set up today. I'll make sure it's there tomorrow. There is a video recording of the previous one that we had in January, so you can watch that to start with. You can get the book, have a read, but definitely join that. It's really, really interesting.
Sorry, Mary Jane, I just missed some of what you said. How long do you have to be with someone for them to be able to make a claim?
2 years as a de
2
facto.
years. Okay.
Yeah.
I'm really good at like 18-month relationships, so that's fine.
Yes, well, yes. Yes. So when someone Gamati said, "Phew, my ex is deceased," well, condolences, but yes. But look, the point of this, the structure he has, and you can also, I'll just show you here on our website, news and events. You can go down here to estate planning and wills, click on that category, and then there's some great articles. What is a family protection trust? The SMSF will guard, the SMSF will safeguards family wealth for generations, and strategies to safeguard family wealth. So you can even start there for nothing. Have a look at the free video and take it from there. It's a comprehensive structure, which, you know, it's you look at it as insurance. So who wouldn't want to protect their kids and their bloodline from having your hard-earned from dissipating to hangers on that have come and gone, and the suckers in life. You know who I'm talking about. So I highly recommend that.
And I did also mention to Mary Jane today in the office, actually, just a bit of a joke. But I was only about 19 or 20 in university when I heard about the concept of what's called a testamentary trust. That was my first introduction to estate planning and trusts, some 30 odd years ago. And I raced straight home to my mum and said, Mum, Nan's going to die soon. We need this. And I just had a fascination with this topic ever since. And it just really is really worthwhile doing. I certainly have done it all. I have my kids regularly. I show them the will. I get them to sign updated trust deeds and make sure that everything is protected from anything going forward.
Now living in Queensland, the other girl there is living in Canberra. So.
John, was that a question to us, or was that a chat to someone in your side of the house? No, maybe it was just a comment. Donna says, if you had no idea about an SMSF, do you guide and advise all the way? Yes, we absolutely do. The part of the self-managed super fund does mean you do need to do something. The 3 things you need to do is the order form, which includes certified ID, and we do strongly urge you to call the ATO and your outgoing super fund and just read through a series of dot point questions that we provide. And that is probably that's the first most you'll have to do. That's designed to remove any potential delays throughout the rest of the process. The next thing you have to do is, when we prepare the legal documents, and there's a big chunk of them, you do need to sign those with a witness or 2 witnesses in some instances. Witnesses can be just anybody. It doesn't have to be a JP, as long as they're over 18 and they're not mentioned or a beneficiary of the SMSF. So you do that. They're the 2 big things you have to do. The third thing you have to do is review and approve the bank account application that we make for you. The rest of it, we do all of it for you. But nevertheless, the ATO, which is the, overseeing all arching authority on this, they do expect you to take the word self seriously. So it's a big challenge for a lot of men and women. Most of us will say, oh, well, I've never had to do any of this. I don't know. It becomes easier, put it that way. You take the first step, and then you go, okay, I'm getting my head around this terminology or this concept. And then you've got that under your belt, and then we help you, and you go to the next step, and you go, okay. And we find that after about a year or 2 that our clients are much more comfortable. They know we're going to do 97% of the work in the setup and the ongoing administration. But you do have to do a little bit of the self. So as long as you're willing to do that, and we offer these free group Q&As, so if you've got questions, just ask, and we're available during the week as well, obviously. So I hope that answers. Kay
So,
is,
Mary Jane, there's a question there you might have missed about the Q&A's being uploaded to the website.
oh, I did miss that one. Sorry. Oh, yes. Not the website. So, okay, I will just share my screen again because I've just learnt this technology. Here we go. Look at that. Even I can learn new things. So on our website, you go to click here on the YouTube icon, and that will take you to our YouTube channel. So there you can see down the bottom is all our Q&As. But if, things upload and it shuffles it differently, you can go to playlists, group Q&A with Cass and MJ, view full playlist, and they're all there. Okay. So we had a little bit of a delay in getting that organised, but we've managed to do that now. Kay is just repeating if you missed it. Hello, yeah, there you go. Sorry. Yep. So Gamati, when setting up a legal structure for a new community project, is there a structure that is better to enable an SMSF to invest into?
So this is a learning topic that we are learning right as we speak with a community that Mary Jane and I have been involved in for a little while. And in retrospect, and from the learning that we've been through, a unit trust would be a good structure. So we can assist with those, setting those up. So it's a company as trustee of a unit trust, and then the SMSF, as long as the main thing about a unit trust with an SMSF investing, it has to be a non-related party, which means there has to be more than 3 people investing, because there's no SMSF can have 50% or more. So you need to have 3 or more. So as long as you've got 3 or more investors with SMSFs, or they don't have to be SMSFs, and you can have an individual investor and 2 SMSFs, or you can have 10 SMSFs or 20 SMSFs, all investing in a unit trust structure.
Yes, it's been a bit of a learning experience, but this is how we become very confident and streamlined in our processes, is by learning the hard way. Trust me.
Yeah, and I can say that everything that I've done in life as an investment and accountant and tax advisor and property advisor and mortgage advisor has all come off the back of my own experiences. So I have never wanted ever to recommend anything to clients unless I've done it myself. And so buying gold and silver, I started doing that in 2012. So how long's that? That's a lot of maths. 13 years I've been doing gold and silver. It's only obviously since the 2020, 2021 crisis that I then really started advising everybody else. Prior to that, I probably only had about 20% of my portfolio in gold and silver. Whereas now, as I said, I've gone back into property a little bit, but that's just for kids. But I'm more than happy to have, previously to me buying another property for kids, is that 100% of my portfolio in gold and silver.
And the property you're investing for kids, that's for you, your family to actually live in. So as opposed to the 10 investment properties you had as an
previously. Yeah, I've gone against the standard investment property. Really just rural property is what I recommend for the, as I said, the crops and the animals and the self-sufficiency, or for family. If family needs a place to live, well, then obviously we still need a place to live, and the rents are becoming absolutely excessive. My son was paying $2,000 a week in rent.
Gosh.
In the Gold Coast, and my daughter was paying $350 for a bedroom. And my other son is moving up, and he would have to pay whatever he would need to pay. So it just made economic sense that the family, and this is a lot of, it's what's happening in the world. Maybe it's not such a bad thing in some ways, because families are coming back together. The kids that have left the nest are coming back home because they can't afford it. The parents that have, coming back in with their adult children, and family units are binding back together again to afford to live. And in some countries, this is the way they do it. I certainly know in China, and I also believe in a lot of the European countries, they build multiple level high-rises houses, and the whole 3 generations of family live together because that's the best way to afford things. And it seems like we're coming back to that in some ways, which isn't such a bad thing.
That's the best way the mums can keep an eye on what's going on. My
Yes.
husband's Korean, so they have a similar sort of situation. But you know what? Yeah, if you treat your kids right and you treat your family right, it can be not too bad. But anyway, yeah,
Yes.
that's certainly something that we're looking at here. My kids never want to leave. No, but this is the thing, in this day and age, no kids want to leave apparently because they can't afford to. So Deirdre has asked, and this is probably a personal question, I can answer it broadly, that one of your members in your SMSF they've got a new job, I understand, but they haven't informed their employer of their SMSF's details, so their super is gone somewhere. What I'm going to guess is that his or her new employer has actually opened up an industry fund and plonked it in there because they haven't provided the super fund details that they've supposed to. They've probably been asked to do it and they just haven't. No, only that person can do anything about it. You can't do anything on their behalf. The simplest thing is if you want to email me and I can follow up with them and just say, look, let your employer know your SMSF details, here they are, and then he or she and potentially we'll have to charge to do it, but we can tell him or her how to transfer it into the SMSF. But I'm sorry, they're the only ones that can do it.
And there is two other ways actually that I did, because I only did it for my daughter this morning, because similar sort of situation. Sometimes kids aren't, even though she's 21, she's not quite capable. And I had to fill in for her employer a form for her super fund, and she's not in my SMSF. That's a long story. And she gave me her MyGov login. She probably shouldn't do that. But if the person that you're talking about, if they have MyGov, it's all sitting there. And the other way of doing it is getting a tax agent to do it for you. Either that person's tax agent, or they could come over to us as a tax agent and we can look it up for them on MyGov.
So we can transfer it, but
we can look it up and find the details and then do all the appropriate paperwork for the transfer.
Yeah. So we can certainly help you there. But in terms of them advising their employer of the details, they have to fill out a form and sign. Well, I mean, we can certainly help. But anyway, contact me at work and tell me who it is in your fund. I can see them here, and we can see what we can do to help. But you can get if it's your son or daughter, you get a big little fly swatter and give them a smack. I didn't say that. So Donna is asking, if you already have an accountant, do you have to work with them, or is an SMSF managed solely by you? So I'm happy to answer that if you like, Cass. So we have an all-service accounting firm with several divisions. Cass I am the SMSF setup. Peter is the head of the SMSF accounting. So your SMSF will be managed by the SMSF accounting division. We have many clients who have their personal or business or trust accounts managed by our our tax division, and that's headed by Kieran. So you can either have your own personal accountant somewhere else and we've got your SMSF, or you can have it all with us. It's up to you. Lol, can I give him a smack for me? I've got a special invoice for giving family members smacks. So we've kind of chatted on and answered some questions in the chat. Does anybody else have any questions they would like to ask? I'm very happy. I do want to say a thanks to everyone for we've had a lot of new clients trickling in, and a lot of them are referrals. So thank you for sharing your good experiences with your friends, and also being patient when sometimes we need to deal with, every business has its hiccups, and sometimes it's got nothing to do with us, like the ATO that I was on the phone to this morning. But we do endeavour to iron out all the problems. The bottom line is we are definitely on the side of the client in terms of empowering men and women to, take direct control over their their finances and their superannuation, and educating anyone who wants to be educated so that you can do it more comfortably.
There are still people typing.
Oh, no, hang on. Oh, Linda. Okay, so we've had a glitch. This is one of the glitches I'm talking about. That, sorry, just chat, Cass, because I'm.
Yeah, I'm not sure what glitch you're talking about, but okay. Kay has said, yes, if Macquarie will start allowing funds to be transferred to CoinSpot again. Mary Jane, I'm not sure exactly about CoinSpot, but they have definitely started allowing you to transfer to Ainsley Bullion, who can put it into crypto. Mary Jane, do you know about CoinSpot?
Yeah, no. So what it was, it's the BSB range that they've blocked. I think CoinSpot's still blocked. Ainsley very quietly has, so please don't let Macquarie know this. They've done a legitimate workaround, so they've got a different BSB. So you can purchase crypto via Ainsley now. The other I don't know about yet. The glitch, I'm going to have to jump off for a second and just see if I can sort a glitch, and I will be back. Sorry about that. There are
And in
people.
the meantime, I will just answer any other questions that come up. But if not, we've almost made the hour, which is good. We normally do, and we are only running these once a month now. If we get more attendees, we might go back to fortnightly. My life is settling down a little bit. Mary Jane wants to come back in. I'll let her back in. So as I said, we may go back to I'm back. Mary Jane's back. I don't know what happened. I think I was just saying we're running these monthly now. It's been a crazy time over Christmas and a few other things happening in the world and my life and everything going on at the moment. But we used to hold these fortnightly. So if once life settles back down into the flow of the year, which generally happens, I guess, around February, March, we might get back to running these fortnightly.
Yeah, there was just Lydia just sent me an email saying she'd been sitting in the waiting room for 15 minutes and could we let her in? So I've just emailed her the link, but I don't know what the problem was. So we'll just wait a couple of minutes to see if she jumps on.
Yeah.
Oh, and that happened to you too, did it? Oh, sorry, Kay. Yeah, I've had terrible troubles today with our booking system. Which is why I haven't been able to get the link for the estate planning thing done yet. Technology, it's fantastic.
When it works.
Oh, yeah, they're making it bad, so we have to ask AI. I don't ask AI anything yet. Anyone here asked AI to do something?
Yeah, I ask AI. It is pretty good.
What do you ask?
Anything I want to know, and it just summarizes things on Google, and yeah, it's actually pretty good. Scary, but good.
Well, it'll be interesting because our generation and the generation under us, and possibly even the one under that, has been taught how to critically research and think. But the ones that are being born now and go straight into AI, how will they even know what question to ask? That's my question.
Well, sometimes they are. Like, for example, I have been setting up some family trust structures and things with my children, and some of the questions they're throwing at me. Like, yep, my 25-year-old son is, well, what is a settler and why is this? And well, who's the appointer and what's that going to mean? And what if...
No, so what I'm saying is that generation's fine. They've got questions, but I'm talking about the ones being born now.
Yeah, exactly.
And I was at our legal conference last week with with Grant Abbott actually, and he's massively big on AI. Like, basically they're all saying if you are not adopting it now, you're going to be too late. Like, it's already 15 years old. It's just becoming mainstream. But what the interesting thing he's got called it's Tax Guru, I think, a little AI thing that they've built, and he said, yeah, by all means, you can use Chat GPT and ask them tax questions, but it'll just crawl the net and come up with something that's actually not quite right or actually not relevant. The AI thing that they've created, which I believe is free, but I'll have a look. Actually, it's curated by tax accountants. So, I mean, the AI bots, they just crawl the net, and you know what it's like when you do a Google search, it'll tell you what they want you to hear. Google back in the day actually gave you a lot of independent information up until probably 10, 15 years ago. But the UN is on video as recorded as saying, oh, well, we now partner with Google because we were quite shocked when we Googled, ABC, climate change, XYZ, that none of the information we provided was up front. There was all this other stuff. Now we partner with Google and none of that other stuff appears.
Yes, DuckDuckGo or any of the others is a good way to go.
Yeah.
All right, well, I don't think anyone else got any more questions, so we can head off, and we'll see you all again next time.
Yeah, so the next one I have booked in, and that has appeared on our website. So that, anyway, you can have a look. It's 20th of March or something like that. Link is there, and we'll see you then. Thank you very much.
See you around. Bye.
Bye.
Bye.